What's going on, everyone? Welcome back to another webinar. Let me just set this up 1 second. Cancel show. I don't know why it's not showing on my screen. All right, perfect. All right, so welcome back to another webinar. In this webinar, once again, just to go over what we're going to talk about. If you guys have any trading psychology questions, this webinar is for that. So if anyone's been struggling with emotions or any exact situation that you've been going through that relates to the psychology of trading, you guys can ask on this webinar. So I'm going to open up the question box right now. And as I open it up, you guys can shoot in your questions. Shoot the questions here, not on Discord, just because Discord's going to get very, very messy. So just shoot your questions right here, and I will go over all of them right now. All right. First question I have is, how do I tone down overconfidence? Now, it depends. It comes down to a few different things, right? So let me go over this. Now, that's a great question, by the way. So how do I tone down overconfidence? Now, first and foremost, the question that you have to ask yourself is, why are you overconfident, right? As a trader, this only kind of happens to people when you are kind of on a winning streak. That's A. If you're on a winning streak, that's when that's happening to you, right? Or B, if you just had a big trade, right? So if you just had one big trade, that's the first concept. Or if you have been on a constant winning streak, if you have been on a constant winning streak and you have made money, right? These are the 2 points where overconfidence kind of kicks in from. Now, what you have to understand as a trader is, once you establish that point of where overconfidence is kicking in from, the second thing you have to understand is, why do you think you're overconfident? Because a lot of traders confuse being confident and being overconfident as two different things. You want to understand, are you just confident or are you overconfident? And if you are overconfident, why do you feel like you're overconfident? Now, for people that don't understand the idea of being overconfident, it happens to a lot of traders, and maybe you have been through it or maybe you haven't been through it, but it tends to start happening when you start seeing any trading play or any trading opportunity. It just looks very, very good. And then what happens to most people is, when they're on this crazy high, right? They go on this crazy high. On that crazy high, they end up taking on terrible trades because they think, oh, I can't be wrong. And then they start losing money. Same thing in situation B. If they had one big trading day, and then they become super overconfident and they start losing money. Now, what you guys have to really break down on toning this down is, first and foremost, like I said, establish if it's A or B. If it's A, you can kind of take a little step back and just keep yourself grounded. But if it's B, like if you're someone that had one big trading day, you should not be at this level of overconfidence. Like, it's gonna happen. I get it. Like, you'll have one of your biggest trading days. Like, I know yesterday and today, a lot of people have been making money on Tesla. You could have had one of your biggest trading days, and after that, yes, your ego's gonna kick in. Yes, you're gonna feel like, wow, I know what I'm doing, and all these emotions and thoughts are gonna kick in. But you have to take a little step back. Now, a good thing to do whenever you have a big day, right, is obviously you want to bring yourself back to reality. So let's say yesterday you made $2,000, right? If you made $2,000 yesterday, what you want to understand, if you made $2,000 yesterday, you want to understand, why did that first happen? Obviously, sometimes you might have a phenomenal trading opportunity, but there may be other times where you're not going to have that same trading opportunity. So let's say yesterday you made 2 grand, and that's been your highest trading day until now, right? Now, if that's been your highest trading day until now, the main thing is, what is your average winner? If your average winner is, let's say, $300, but yesterday you made 2 grand, obviously there was somewhat of a disconnect. Maybe you sized up a lot yesterday. Maybe there was a big play that happened yesterday. Maybe you let your winners actually run all the way yesterday, or you switch something up. Now, when you see that big disconnect, guys, when you see like one day where you have such a big winner or big loss, you want to understand that difference on why that happened. And if it was, let's say yesterday, how Tesla went almost 500, if it was because of a big day like that, you have to understand that these big days are not going to happen every day. Now, if you accept that, you don't let the confidence kick in. Now, the people that don't accept that and they're like, oh, I made 2 grand. I was making 300, 200 a day. Now I made 2 grand. Now what that person does is they now expect to make that 2 grand again. And they think, oh, wow, I'm this amazing trader. And then the first thing the market does to you, the moment you think that, is the market takes your money back, right? So if you had a big day, you want to take a step back. Now, a good way to take that step back or tone it down is, if you feel like you're overconfident, cut your position sizing in half, right? So let's say your max risk amount on a trade is $500, or let's say your max risk on a trade is 200. Whatever your max risk amount is, cut it to half. So if you're risking $500 in each trade, make it 250. If you're risking 200 on each trade, cut it to 100. If you feel like, wow, every single play I look at looks like it's amazing, looks like it's great. Now, obviously, that also depends where you are in your trading career. If you're someone that just started out, it would kind of make more sense for you to play it safe and do this. But if you're someone that has been doing this for months, if not years, and you understand that, wow, weeks like this don't happen all the time, I have a lot of momentum, everything in the market looks like very straightforward plays, then obviously you should accelerate, but you shouldn't accelerate a lot. Like if your max risk is 500, don't increase it to 1500. Don't increase it to 1000. Maybe go 700, maybe 750 tops, right? But that's if you have been trading for quite some time and you can distinguish the difference between, a solid market rally, solid high potential plays, and you can distinguish the difference between you just allowing your ego to get in the way and destroying your upcoming trades. But yeah, this is very, very important, knowing when to do this. And if you do feel like this right now, once again, size down. And that's like one of my answers to a lot of things. Whenever you feel uncertain about the market, whenever you even feel too optimistic about the market and things don't look great, but you still want to trade, just size down, trade a much, much smaller position, right? Next question. Okay, interesting question. Okay, I know for 100% that I am wrong in the trade, but I still keep holding. That's not really, see, if that's the thing and you're 100% wrong, that has a lot more to do with discipline, and that has a lot more to do with you getting trapped in the idea of hope, right? Because think about it, if you know that a stock 100% is going to go down, and obviously 100% doesn't exist in the market, but let's just say stock is at 10, an option is at 10, whatever the case is, and it's going to go down, right? It's at 7, you don't sell. It's at 6, you don't sell. It's at 5, you don't sell. Now, the reason you're not selling is because the moment you hit sell or the moment you exit your position, you have now factored in this loss. Most people do not want to face the reality of that, right? So that's number one. The reason people aren't exiting is because they don't want to face the reality of like, wow, I lost money. Now, obviously, at this point, you're down on the trade, you're losing money. But until you hit sell, right, until you click that sell button, it's not reality. So you're kind of afraid to face the reality aspect of it. So you kind of don't want to execute the trade because there's a little bit hope that kicks in and tells you, hey, if you hold on, it may go up. What if? And that also goes back to the idea of discipline, right? If you know for a fact something is going to go down or going to go up, and you can't execute and you can't follow your plan, you lack discipline. And if you lack discipline, right, and you don't have control over your own mind, you shouldn't trade right now. Like legitimately, I think if anyone here watching, if you think you have a very hard time executing a trade, I highly recommend you take a step back from trading and you work on that discipline aspect first, because until you have this narrowed down, until you can sit down and actually execute a trade and follow your plan and really try to separate emotions to a certain extent, like unless you're able to do that, you won't be able to make money in the markets. It's just not possible. So if this is if this is you and or anyone watching this right now, if this is what you go through, just kindly take a step back. And if you don't want to take a step back, it's fine. I understand. But please don't trade with a lot of money. Trade with a very, very small account. And even if you're like, oh, I have 5 grand in my account, but I'm going to trade with 1,000. If you lack discipline, do you really think you're not going to trade with 5 grand? Come on. So it's like, if you lack discipline, right, and you do want to trade, get 4K out, have a small account, and use it to practice. But this has to be developed, and you just asking this question just shows you lack a lot of discipline. So that's something that really, really, really needs to be built, and it's a serious thing in trading. But it's good that you're self-aware on that idea of knowing that this is what, you know, I'm kind of lacking. Next. How do you have the mindset to exit scalps when they don't work out? Thanks. So whenever I take on any trade, especially from scalping, for anyone that doesn't know the idea of scalping, you're in and out of a position in seconds to maybe minutes at times, right? My whole idea is I know when I'm going in, I know what I'm looking for on the upside, right? I know what I want on the profit side, and I know where I'm gonna exit. Like I have this like engraved in my head. Like before I enter a trade, and there are times I mess up. There are times I don't follow my plan. I'm not perfect. No one's perfect. You're gonna mess up, right? So if you mess up here and there and you don't follow your plan, it's okay. But I mean, out of 10 times, if you do it 1 time, or out of 30 times you do it 2-3 times, it's fine. But if out of 10 times you're not following your plan 6-7 times, now that's a problem, right? Now, before I take on any trade, I immediately know, right? Let's say I'm scalping options. Now, obviously, when you're scalping options, you have your premium on this side, and then you have the chart here. Now, let's say I'm entering on, let's make it a basic thing. I'm entering on a breakout. My whole idea would be if I'm entering a break and I'm watching a breakout, if the stock is breaking out, right? And I see, let's say on the tape, I'm watching the tape, I see that the tape is looking weak, or even excluding the tape, let's say once it does break out, I see that the stock is unable to hold. I'm not looking at my P&L. I'm not looking at anything. I already know before I got in that on this break is where I'm going to get in. But on this break, if the trade does not look strong and I'm not comfortable or I don't like something that's being presented within that trade, the first thing I am going to do is exit. I'm not going to think. Don't think too much. What a lot of people do here is they start thinking. Now, when you think too much, especially when you're scalping, you kind of make it hard for yourself, because now let's understand this. Let's say the stock reverses. You told yourself you're going to exit if the tape looks weak or the stock in the breakout doesn't look as strong, you're going to exit. Let's say when it does break and it does look weak, you start thinking, oh man, how much do I think I'm down? Oh man, am I going to be down 500, 400? Oh man, I can't take another loss. Oh damn, I wish I didn't trade this. As you're thinking all these thoughts, or oh man, maybe it's going to go up. As you're thinking all these things, the stock is moving lower and lower. And as it's moving lower and lower, your P&L is taking a bigger hit and your premium is obviously going down. Now, once that happens, immediately more questions come in. Oh man, I was only down 400 a few minutes ago. Now I'm down 600. Now I'm down 800. Now, when you start thinking, more and more new questions kick in, where now you're down maybe 1400, where originally if you exited on the first reversal or first failed point, you would have lost maybe 400. But because you thought so much in that 5-minute or 10-minute or 3-minute period, you're now down 1400 because you kept thinking too much. You kept asking yourself questions. Guys, when you're scalping, you can't do all those things. You have to be super quick. It's yes or no right now. You can't ask yourself questions. If you ask yourself questions, it can't be a question after a question after a question after a question, because once you do that and you're scalping and it's an immediate trade, the trade tends to go against you, and now you're down way more than you anticipated, and now it becomes a lot harder to take that trade or execute the trade the way you probably should have, right? So make sure when you guys are taking these trades, you understand a concept like, okay, I'm not going to question a million things, right? I know where my entry is. I know when I'm going to exit. If I ever don't like anything, I'm out, I'm gone, right? So that has to be a mindset before every single trade. Next question. How do I improve underconfidence? All right, so you're not confident at all. Now, this also depends on where you are in your trading career, right? If you're in, let's say, 0 to 3 months, being underconfident or not having confidence is totally fine. After 3 months, I think that's where people need to start building confidence, or that's where you should start seeing confidence. If you are actually practicing and applying yourself and staying active and consistent at the market, after 3 months, you somewhat start getting confidence. Now, I don't mean where you're able to look at a stock and be like, oh my God, I know what this stock is going to do, right? Not confidence at that level, right? But confidence in a level where if you take on a trade and it doesn't work out, you're okay with it because you know the trade looked good at a point, it just didn't work out. Confidence to a point where if you got in at 10 and you got out at 12, but the stock is now at 13, you're okay with that because you know you captured a good play, right? That typically would happen after 3 months, some people 6 months, and so on. So it depends where you are in your trading career. If it's around here, it's okay. Don't worry about it. Almost everybody's at that stage point. Now, some people when they start out, it's actually the quite opposite. Their confidence is super high. This is where the confidence is, and then they make a little bit of money, and then once they lose money, their confidence goes very, very low, and then it becomes very hard building it up. Now, if you're ahead of the 3 months, you're in 6 months, a year. It depends on why did you lose confidence, right? If you lost confidence because of consecutive losses, if you lost confidence because you lost a lot of money, what's the reason of the confidence? Like, why did you lose it? What happened? Now, building that up is a process. Doesn't happen overnight. It's not going to happen in a week. Building your trading confidence can take weeks to maybe months, right, at times. So that depends on you, on how you're going about things. But what you have to do is wherever you are, right, and this is mostly for people that have traded for months, weeks out, and built confidence and then lost it. What you have to do is you have to really, really take yourself from wherever you are and bring yourself at point zero. And you have to start from ground zero. Like, you have to really tell yourself, everything that I think I know about trading, I don't know. So I'm going to take a step back, right? Go through everything again, learn everything again, and reapply myself from a clear head, because I don't have confidence because I lost money. I don't have confidence because I blew an account. I don't have confidence because I lost money 3 times in a row. And that has been ultimately destroying my confidence. Now, when you take a step back and you start going over the material and start learning again, you start seeing things like, wow, now I know why I lost money. Then when you re-enter the market, you re-enter with a very, very small position size. You slowly increase your position size. Do not increase your position size very aggressively. Take a step, one step at a time, and increase your position sizing like that. Do not aggressively just go and increase your position size. It's kind of like taking the stairs. You have to go from level 1 to 2 to 3 to 4 to 5. What most people do is they go from level 1, they make money, and then they go to level 10 on position size, and then they get burned and they go back to the basement, right? And that's not what you want to do. You want to take it one step at a time. All right, next question. I have green days and red days, and green days and red days. Once I hit -100, -150 loss in a day, I step away. Is that a good thing to step away? Yes, that's a great thing to do. I think when you hit a max loss amount, depending on your account size, depending on whatever amount you're comfortable in losing, I think stepping away is a good thing to do. Obviously, once you get to a more higher level of trading, I don't think you should. It depends on your account size, really. But I think if your first 2 trades were just bad trades, you shouldn't step away. But if you feel if your first 2 trades were emotional trades and you get affected by them, you should then step away. So, for example, let's say we have 2 situations, person A and person B, okay? Let's say person A, if he or she loses money on the opening, and after they track their trades, they realize whenever they lose money, right, and then they try to trade afterwards, most of the time they keep losing money. Person B can lose money the first hour, first 2 trades, and still make money. He or she realizes that they don't really get affected by losses, right? So if you're person B, you are someone that can constantly keep going a little bit longer. But if you're person A and you should have a max loss amount, and you should immediately exit. And when I say exit, I mean close your computer, go out for a walk. Do not sit in front of your computer. Do not try to trade. Do not try to just watch the market. Just close your computer and walk away, because a lot of people tend to keep losing money over and over again when they take one or two losses, because now it becomes like a domino effect where one loss leads to another loss, which leads to another loss and another loss and another loss, which now kind of crumble your account. So yeah, it's good to have a max daily loss amount, especially if you're starting out, especially if you're someone that does get affected by losing trades or losing positions. All right, next question. How do you break the personal barrier of taking your trades to the next level after a series of losses? After you have a series of losses, you should not look to take your trades to the next level. That's number one. So if you have lost 5 times, 6 times, 8 times, 10 times in a row, I don't think you should try to take your trading to the next level. And my idea of taking it to the next level is having a higher profit amount, or taking on different type of trades, or being more aggressive. I don't think that should be done. What I think should be done is, if you have lost 5, 6, 7 times, you need to take a break. First and foremost, understand the reasoning, right? For the series of losses, like, why did you take these losses? What happened? And then once that's done, you then want to go and understand, this is why I lost money. Okay, I understand, I got it. Now I'm gonna re-enter the market. Now when I re-enter the market, I need to be super aware of these problems. And as I'm super aware of these problems, I also need to understand that when I do start again, I'm not going to be aggressive. I'm not looking to take my trading to the next level. All I'm looking to do is build momentum. I just want to build momentum. That is all. How am I going to build momentum? I'm going to build momentum by taking one trade at a time, and I'm going to size down and take it slow until I build confidence. And once I build confidence, same concept, I'm slowly going to increase my position sizing. That's what you're going to do, and that's what you're required to do at that point. Not really after you have a huge losing streak. It needs to be a step-by-step process to kind of get your momentum and rhythm back. All right, next question. How to work on not holding on to a losing trade for too long? First, depends. What do you mean too long? Are you day trading? Are you swing trading? What's your trading style, right? Now, obviously, I don't think there should be a time limit, right? Unless you're day trading and it's end of the day, or you're scalping and you're in a scalp position for like an hour. Your trades and exits should come from your dollar value. Buy at 9, stop loss at 840. Okay, stock goes to 840. Are you selling? Why did you not sell? You said you're gonna sell at 840. Why did this not happen? Let's dig down, let's dig deep and understand. Why did I not sell there? Oh, I didn't sell there because I thought it would go up. Oh, I didn't sell there because I was scared of taking a loss. Oh, I didn't sell there because I just couldn't execute the trade. Whatever the reason is, right? How many times has this happened? Now, obviously, this is once again a problem of discipline, a problem of following your plan. And if you can't follow your plan in trading, you're not just magically going to become a great trader overnight. Discipline aspect has to be factored in once again. And I think that's where you really, really, really need to build a lot of discipline. And if discipline is not built, and you can't do something as simple as this, you're going to have a very hard time. Now, if you're still having a hard time, one thing I recommend is just put automatic stop losses. Go on your platform and apply the stop loss. Say, this is the stop. This is what I'm going to do, and leave it at that. Like, have the stop loss applied and let the system take care of it. If you're someone that has a hard time on exiting positions, put a hard stop. Don't use mental stops. Put the hard stop, let the hard stop go, and take the trade from there. All right, this screwed me today. I need help with how to stop trading and calling it a day. Yeah, guys, this is what you have to understand, right? In simple terms. And it's like the psychology aspect of trading is spoken about a lot, but I think a lot of people don't pay attention to it. This is you, right? Let's say we take two situations. Situation A, right? Let's call this situation A. Let's call this situation B, okay? And I want you to understand this. And I'm pretty sure for the people that have traded can relate, and people that have not traded probably can't relate yet, but I'm pretty sure you're gonna go through this and you're gonna see exactly what I'm talking about, okay? Let's say situation A, okay? Now in both situations, you have a mental bucket, right? This is your mental bucket in situation A. This is your mental bucket in situation B, okay? Now, obviously, let's say you both start with proper sleep, proper nutrition, you're in front of the computer, your headspace is right, everything is good. You're both at a level of 100 in the morning, right? Of 100 in mental space, mental clarity, right? Now, let's say person A takes on a trade and he or she immediately loses 500. Let's say their max daily amount is 300. He or she loses 300. He traded, I don't know, let's say Apple. This person did not trade Apple because he did not see a trade. So he's like, nope, I'm not going to trade Apple. Now, the moment person A lost 500, his mental capacity goes down, his emotions go up. The idea of making it back, the idea of not losing, the idea of maybe seeing other people make money. And guys, that subconsciously gets to you too. If you're seeing other people in the chat or other people on Instagram make money, and it's affecting you, I would highly suggest either get off social media for a bit or don't look at the profit and losses, right? Because that really gets to people, and I know that because when I originally started, and I would have like a bad trading a month or a bad trading week, or even my first 2 years when I wouldn't make money, and I would see other traders that I had no idea who they were just on social media, YouTube and Instagram and all that stuff making money. It would get to me like, wow, how is he or she able to do it? I'm not. And then that would mess with me more because at the end of the day, I don't want to walk away with a negative P&L, right? So now what happens is at this point, once again, in situation person A, his or her mental capacity goes down. Person B is still good, not affected by anything. Now, what person A tries to do is they want to make their money back. So since they want to make their money back, their next trade is not a very calculated trade. Now they're in a situation where they're red. So their goal is to not even make money, but is to get their 500 back, right? Now the trades he or she takes become terrible trades. And you guys are going to realize this after you make one bad trade and you go back to your old trades, you're going to realize a lot of the trades afterwards are terrible. Like they're legitimately terrible trades. And you're like, wow, why did I take that trade? Oh, it came from this first trade. Now this bad trade carries over to your next trade. Now what happens in situation B, there might be a good setup on, let's say, Tesla. But because you're down 500, because you don't have the proper mental clarity, you now overtrade or you enter too early or you enter too late. Now you lose money again. Let's say you lose 400. Person B, because he or she wasn't affected, they were able to take on a clearer trade because they don't have any agenda, where person A has an agenda and their agenda is to make the 500 back. So this person was able to maybe make $350, let's say. Now, person A is down 900 for the day. Obviously, right now, you should call it quits and you should say, hey, I'm down 900. I should exit. Now, there's obviously certain emotions that trigger this person. And those emotions might be he or she might go on Instagram and see someone made 5 grand, someone made 6 grand, someone made 400, someone made 100. They're like, shit, I lost 900 and all these people are making money. No. It can't be it. I'm good. I know what I'm doing, blah, blah, blah. And immediately this person gets aggressive and this 900 turns into 1700, 1700 turns into 2600, and then it keeps going red until maybe here and there, and this has happened to me and I can speak on it, where I've taken my P&L down 15, 16 grand, and then I would have one lucky trade, and I'm gonna call it a lucky trade. I would have a lucky trade that would give me 8 or 9,000, and then I would walk away with the day of maybe being down only 4 or 5 instead of 16, 17. But those are lucky trades, don't happen a lot. So what happens is this person would get lucky and end up maybe losing 500. But at the end of the day, the moral of the story is, when you guys have these bad trades and you realize that you keep consistently losing after a bad trade, turn off your computer and walk away. Like, I mean, walk away from everything. Like, that day is done for you. That trading day is finished. That's it. Close the computer, walk away. Because if you can't walk away, right, and if you can't get away from the computer and you sit in front of the computer and you tell yourself, I'm going to not trade, that's a lie, because you're going to do it. You're going to see something in the group chat. Maybe someone is saying, oh, I'm getting in Tesla. And you're like, oh, fuck, everyone's getting in Tesla. Fuck it, just get in. Just one trade. Maybe it'll make your money back. You're not thinking with a clear head. Just close your computer, turn it off, walk away. Like, you can come back later and watch the markets when the market is closed, but at that exact moment, just walk away. That's it. If you don't do that, all you're gonna do is you're just gonna drive your P&L down and down and down consistently over and over and over again, and that's not what you want to do as a trader, right? So when that happens, just turn your computer off. All right, another question. How can you identify whether you are being overconfident or the trade is just going against you? I am having a lot of trouble identifying whether it's my emotions that are taking over the plays or the play is just going against me. I mean, depends what you mean by going against me. If I buy a stock at 10 and my exit point is 922 and the stock gets to 922, the trade has now went against me, right? There's in this situation, there's 0%, there should be 0% of hope. No, my exit was 922. I told myself, if this gets to 922, I'm out. It's at 922. I need to be out. You should not be in this trade until 8. If now the stock is at 8 and you're still in, there shouldn't be overconfidence. Now it's not about emotions. Now it's about risk management. Now it's a numbers game. You're down 20% on a trade where you should have been maybe down 8% or 7% max. Right now it becomes a numbers game. So there's a fine line between knowing when to be overconfident, knowing when to hold on, and knowing when you need to cut your losses based on a system. This system is telling you you need to get out at 922 because that's the level you got to get out at. That's what you set out for yourself. Be it right or wrong, you're not following your plan. So if you end up holding this play for a long period of time, or you're having a hard time identifying if you're being overconfident or not, that's more so on you just not letting the trade go. If you have this plan, you shouldn't have a hard time. And if you are having a hard time, it comes down to you just not having discipline. Same question here again. Recently, after logging my trades, it has been helping a lot, and I have been having more consistent green days. But my red days are huge. I tend to hold so long. Now, let's take the situation, for example, right? If you just take your red days and you keep your red days, right? Let's say this person has 8 green days, right? And let's say 10 red days, right? If you have 10 red days. Now, if you have 10 red days, you wouldn't really care if you have 10 red days and you have 8 green days, as long as your 10 red days are small. If they're small, you wouldn't care, right? But if you have your red days where you're losing $500 on your red days, but you're making $100 in your green days, that's a big problem. That's saying, A, either you're not allowing your profits to run, B, your losses are way too large, your risk reward ratio doesn't make sense, or C, your risk reward ratio before the trade and after the trade are completely different. And if you guys go to part 7 on the online training, I break that whole concept down of how our reward to risk ratios are great before we take the trade, but they always change, or typically change, when we are in the trade and when we're out. So you want to make sure it's that changing, and if it's changing, where's the disconnect, right? You shouldn't have a lot of large red days. And like I said, you want to understand why that's happening. So if you are logging your trades, you want to understand what's the reason for that. And if it's because you tend to hold so long, you're not following your plan, I mean, that's just based on what you're saying. It could be just that. Maybe if you followed your plan on those 10 trades or 8 trades or 9 trades, and you did exit when you were supposed to, you probably wouldn't have those large losses. And that should be a huge eye opener for you. right? Hey, if I followed my plan and I exited when I told myself I would exit based on the price chart, I wouldn't lose this much money. I lost this much money because I wasn't able to follow my plan. I wasn't able to listen to what I was supposed to originally do, right? So just, I mean, it comes based on this. It comes down to you maybe just not following your plan. Hey Omar, my question is how to overcome oneself after taking a big loss. All the negative energy and emotion stops me to go back to trading. Why'd you take the big loss? That's number one. I want to know why the big loss happened. I'm pretty sure the big loss happened because you were probably trying to play a gamble play, a lotto play, trying to get rich overnight. That's probably A. You were trying to make a lot of money in one shot. B, you probably took a big loss because you didn't exit when you were supposed to. Right? That's it. If you guys are taking big losses, it's not happening because you took on a terrible trade. I can go on and take a million terrible trades right now, but if I have my proper risk management and I actually follow my risk management plan and I execute on it, I'm not gonna have a big loss. I'll have a 500,000, maybe $2,000 loss. I can trade a million times. But if I go and I trade a million times and one loss is 90,000, I'm not trading. I'm gambling. And even if you guys see my losses, I think my biggest loss last year in 2019 was probably, I think, 16,000 compared to my biggest win. I mean, there's a huge disconnect there, right? So I know, like, even that $16,000 loss was not supposed to be 16. It should have been cut at 5, maybe 10 max. I overextended it, but even overextending it wasn't more than my biggest winner, right? So your big loss is happening because of you, right? It's you who's not following your plan. It's kind of like this, right? In simple terms, let's say you guys are running a marathon. You're running a marathon of 20 miles, right? The marathon is in 6 months. I tell you right now, in 6 months, what you have to do is eat right, jog an hour every single day, 1 day of recovery, and you have to do X, Y, and Z for 6 months. Now, let's say in 6 months you do all that. Maybe you won't complete the marathon and you won't do as well as you wanted to, but you'll get somewhere. You'll make progression, right? You'll progress. You'll get to a certain point. You probably won't tire yourself out to an extreme level. But now, let's say in those 6 months you didn't follow the set of rules that you had to follow to actually get to that level. Now, what do you think is going to happen when you try to run that marathon? You're not going to be able to complete it because you didn't follow these rules. Now, if you are unable to complete it, the first thing you're going to say is, oh man, I have negative energy or my emotions are affecting me. No, your emotions shouldn't affect you. You just didn't listen and follow your plan. Like, you didn't listen. It's like me telling you, hey, don't jump off a 50-foot building. You're going to die if you jump off it, and you jump off it. Like, if you jump off it, you hurt yourself or you die. Like, you knew what was going to happen if you did that. And that's a very interesting topic because it really baffles me on just like how so many people are like so unaware of themselves and like just don't understand their own mind. If you guys want to see something interesting, everyone that's on here, I'm gonna show you. So there's something called a dopamine. Everyone knows about dopamine. If you don't know what dopamine is, take a look at it. So dopamine is the thing that it's in our brain. So every time we go on social media and we like pictures, or someone likes our pictures or comments, or we keep going from Instagram to Twitter to Facebook or whatever, our dopamine gets high. So what some people do is they have a dopamine free day. So for 24 hours, they avoid anything that gives them a lot of dopamine. Now, the whole idea of doing that is because of social media and because of technology, we constantly need a lot of dopamine. We need a lot of dopamine hits. It's kind of like drugs. It's very similar to doing cocaine, right? Like, it's like they did like a whole analysis on it. So it's like people that are addicted to cocaine or drugs, it's the same idea, if not worse, being addicted to the dopamine hit. So because we're addicted to the dopamine hit, we need constant pleasure. So because of that constant pleasure, that affects our mind. Our mind is like legitimately it becomes very, I don't know how to say it in a proper way. It just doesn't become very smart. Like, I don't want to say anything offensive, but it doesn't become very smart, right? So we constantly need dopamine hits. So when we're trading, right, that shows a lot because as a trader, we tend to start seeing like, wow, how weak-minded we are. We start seeing how much control we don't have over our mind. And if you think you have control over your mind, just go 48 hours without trying to get massive dopamine or consistent dopamine from Instagram, social media, texting people, having bullshit conversations, like anything that's going to trigger your dopamine in a bad way. 48 hours, go without it. And I promise you, you're going to have a very, very, very hard time on doing so, right? And that itself is going to show you, for all the people that are having a hard time, having discipline or cutting losses, that's going to show you itself like, oh shit, like my brain is all types of fucked up, right? And if you go even online, there's books on it, like how the internet is legitimately fucking up our brains. You'll start seeing how that affects our brains, and that simple thing of your brains being messed up all carries over to trading. Like it legitimately, your brain is like this because of social media, right? And which is why I tell everyone, try to meditate 20 minutes, 15 minutes a day, because it kind of helps clear it out. But if you have a brain that's like this, and you're obviously not at that level that you should be at, you're going to have a hard time cutting losses. You're going to have a hard time executing trades. You're going to have a hard time following your plan. And no matter how much information you know about the market, about trading, that execution part is always going to lack. So that's something that needs to be built on. So if anything, go look it up, read up on dopamine, and read about how to fix the whole, social media, the trigger points of these apps and games that we have on our phones affects our minds, and you'll see how much of a difference that's going to make. And it's not going to happen overnight. Like, you're not going to be able to fix it overnight. It's going to take weeks, but when you do fix it, you're going to get a lot of clarity, and you're also going to have a lot more focus and control over your mind. Like, hey, this is something I want to do. Okay, this is something I don't want to do. And you start creating trade-offs that make a lot more sense for you at that point. All right. How many times does it take to finally say I understand the market? To be honest with you, never. No one understands the market. I don't understand the market. What the market is doing right now, I wish I knew. I wish I knew, like I know, like, put it this way, not even the billionaires that control the market, or billionaires that have a huge amount of money into the marketplace, they don't understand the market to that level. No one really knows. The idea is to get bits and bits of pieces, put them together, right? And formulate a trade idea. And if you're wrong, you risk this much, but if you're right, you make that much. And if you do that over and over again with being able to put some pieces together, you'll give yourself the highest level of success. So, but you never get to a point of I understand the market, right? It's very hard to do that, because if anyone fully understood the market, they would always, like, typically always make money, and that doesn't happen. All right, next question. How do I manage position sizing? The days I take small positions, I have green days, and the days I take big positions, I have a red day. How I overcome my emotions in big positions? I mean, just reading that, I think it's pretty clear right there why you're having big red days, because your position, right? Because think about it. Let's say your position sizing is your $200, where your max loss is 200. Now, let's say you increase your position sizing the next day to 500, right? On the same stock, let's say it's 500. Let's make it 6, right? Now, when you trade, if you bought a stock at 10, right, and you bought 200 shares at 10, that stock has to go to 9 for you to lose $200. Now, if you bought the same stock at 10 and you bought 600 shares, right? By the time the stock maybe goes to what is that, 20, 30 cents, it makes a 30-cent, 35-cent move about. Every time it makes a 35-cent move, you're down about 200, or 33-cent move. So it goes down 35 cents. You're like, oh shit, I'm already down 200. It goes down another 33, 35 cents. You're down 400. Now with the same move, you're down 2x more. So you panic way too early. You're unable to actually control the trade the proper way and make proper choices, because you see a lot of numbers fluctuate, which you're not used to. So when you are increasing your position,
you have to do it in a very slow way, right? So if your max loss is 200 on a trade, take your next max loss to 250. If you can consistently do 250, then take it to 300. You consistently do 300. I mean, it's kind of like, once again, taking the stairs, right? But you don't. It doesn't look like that. It kind of looks like this, right? Let's do level 1, level 2, level 3. You go from level 1, level 2, level 3, and then sometimes you may even come back down, and then you go up. You go up. That's the whole game. That's how position sizing is built. But it's not. It doesn't happen in like one shot. Like you're not gonna take one big trade and position sizing is gonna kick in, right? So it's not. That's not gonna happen. It's gonna take time, and that's something that you have to understand, that it's a whole process of the stairway process, where it's gonna take multiple trades and take from there. What month would you recommend to take bigger positions? I don't know what you mean by month. I would assume that you're meaning like after how many months? I would say I mean it honestly depends, right? On each individual. I would say obviously until you're comfortable and until you build consistency. Once you get comfortable, you build consistency, you show that you're able to make money over and over again, and you build your cushion. You should then build up your position size very small. Don't make it rapid. Don't go from a max loss of $1,000 to 3,000 overnight. It should be slow and steady. Once you do that, you'll start getting a lot more comfortable. Next question. Hey Omar, I've been taking your online course and have been trading for a year now. I'm in the middle of your online course and I notice myself at times being distracted and my brain focuses on other things. I know in my heart I want to become a full-time trader, but how can I improve my focus? How can I have more mental clarity? One way is like I said, meditation. I think meditation's huge. Meditate for 20 minutes a day. Get yourself to meditate every single day, 20 minutes. First thing in the morning, like make it a habit. It's going to be very hard doing so at first. Second thing is, I think, limit your phone time to 1 hour a day max. Like limit it to 1 hour a day. You don't need social media. You don't need all that stuff. Like even if you want to be on it, cool, but limit yourself to 1 hour a day and time block it. Like you shouldn't be watching the online training, or even besides the online training, working or doing anything, going from work to video, work to video, work to video. It takes about 30 minutes for you to build up your focus and get into flow. So every time you do that, all you're doing is disrupting yourself. So this right here is going to help you a lot. It's not going to be easy, but like legitimately put it away, lock it away. And if you're someone that has a very hard time, with your phone, and you don't have self-control, and it's totally fine not to have it, but being aware is number one, and then building towards it. Building towards it is kind of like taking your phone, turn it off, put it in the car. Take your phone, turn it off, and hide it somewhere. Like put it somewhere where it's very hard for you to access, right? And once you do that, your brain is gonna start getting a lot more clearer. And try yoga. Yeah, yoga helps too. Someone just put someone put yoga. Hey Omar, can you please tell us how exactly you use the Calm app? So if you guys are meditating, this app right here, a great point. I use Calm app. So if you guys download the Calm app, right, they have a feature. It's a very, very cool feature. I actually have it on right now. It's a very cool feature. If you guys go on the Calm app and go to more, it's only on the app. I don't think they have it on the computer, but if you download the app, you go to Calm, the Calm app, and then go to more at the bottom. There's breathing exercises at the bottom, right? There's called breathing exercises. When you go on the breathing exercises, what they do is they have this bar, and then they have lines in between it. So every time it goes from here to here, it makes noise. It makes noise. It makes noise. So I use this part of the app because every time it makes noise, I breathe in, I breathe out. I breathe in, I breathe out. And obviously, in between, your thoughts kind of wander off. But the whole idea is to stay focused in between these points. So if anyone has that app, check that part out. If you don't have the app, you can download it. I think it's very, very helpful for meditating. All right. Next question. What's the psychology behind to allowing your winning trades to play full out to their full potential. What to do on how to let your winners run. Many times I didn't get the full play, even when I knew there was no reason for me to get out. I walked away happy because I told myself I was happy with the profits. In the beginning stages, that's cool because obviously when you make money in trading, be it your first month, 2 months, 3 months, 4 months, depending on where you are, seeing profit or profit itself makes you very excited, and that's okay. It's not the right thing, but it's okay, and I understand we're gonna go through it where we, obviously start something brand new and we're like, wow, we made money, phenomenal, cool. But long term, you shouldn't be happy because you walked out of a trade green, right? Every single trade you guys take should have a rating, right? So for example, if I buy a stock at 10 and I sell it at 10.50 for absolutely no reason and I made, let's say, $400, I shouldn't walk away with this trade and say, wow, I made 400, I'm happy. No, let's go back to the trade. There was no reason for me to sell at 10.5. My exit point should have been at 12. Why 12? Because that's where the reason point kicked in. That's where the trade made sense. I could have maybe made, I don't know, 2,200. Now, obviously, some trades you'll panic and you'll end up exiting early, and that's okay. You're not going to capture a move to its full potential all the time or any time, but the idea is to try to get a piece out of it, right? So, for example, Tesla. Let's say Tesla moves from 450 to 500, right? Now, if Tesla moves from 450 to 500, obviously, it's amazing if you buy here and you sell there, 100%. That's amazing. But in reality, that's not going to happen. In reality, even if you can get a capture move from 450 to 470, you're good. As long as you have a reason of why you sold at 470. But your reasoning at 470 should not be, oh, I sold just because I saw green. No, what was your reasoning? And if you sometimes can't establish a reasoning on why to exit and you panic, yes, then you can exit, but you should always have a solid reasoning. Like there should be a reason at the end of the trade and why you exited. And if you can't find a reasoning and you still want to be in the trade, put up a stop loss. Now you're in the trade. Now you know you're not relying on a mental stop loss. Now you know you're giving yourself a higher probability of actually being in the trade and taking the trade from there, right? So it's also the idea of not trying to capture the full play, right? Don't try to capture the play 100% because that's not possible. Like I really don't think, to be honest, that's possible at all. So don't try to capture the full play. And when you do exit, you have to have a reasoning. And then if you do have a reasoning and you get in at 450 and you get out at 470, don't say, oh man, why did I sell at 470? I wish I held. No, first, you obviously, number one, you made money. Did you have a reason? Yes, you had a reason. Was that part of your plan? Cool, worked out, walk away. Maybe I could have done something better. Maybe I could have cut down my position sizing. And this is something I've learned about myself. And when I post my trades at times, you guys can see, I don't sell my full position right away. Even with my Tesla trade the other day, yesterday, feels like forever. I didn't go and exit, all the way, right? Even my Apple trade a week ago, I didn't exit 100% on my first exit point. Well, sometimes what I do, and I realize I tend to do this better, is when I'm in a trade and it goes up 100%, 50%, whatever the case is, I like to take half off because when I take half off, it becomes a lot easier for me to trade the remaining position. But if I hold the full position from here to here, I start trading bad around this point, right? So I learned that about myself. So that's why sometimes I take half off or 1/3 off or something off just so I know I locked in profits, I'm comfortable, I decreased risk, and it just becomes a lot easier for me, and that's why I continuously do that. I'm going to do 2 more questions and then I'm going to end it from there. I'm going to end it in 30 minutes. So what 2 questions? These 2 questions. Okay. Is it an excuse when your trade goes against you really hard in a split second and you decide to hold to the next level closer to when the price is currently at? It depends. This is a very interesting question, but it depends, right? So if let's say I have a level at 262, and this is probably if you're scalping, because if it reversed in a split second and really had to drop, and the stock is, let's say, at 264, right? And I have a level of 262 and I have a level of 260. Now, if let's just say in a minute, stock goes from 264 and then boom, it's now at 261 and my original stop was at 262. At this point, yeah, I'd probably wait for the break of 260, right? But if now, let's say this was 268 and my next stop was 260, then I wouldn't exit if this was closer. So it depends on what the chart, like where the levels are at the chart, right? Depends how far along is that. The further it is, the harder it's going to be, right? So that's where the levels depend. But if the stock does get to your next level, then at times I'd wait. But if a stock has a very hard drop, besides waiting, and I'm assuming you're trading on a 1 minute chart, I'd wait for the candle to close. Like wait for that candle to close and take it from there, right? Because sometimes 1 minute candles look like this the first 10 seconds, and then when the candle closes, they kind of look something like that. There's actually a lot of good questions on here. I wish I did not have to go. Next question. Do last one. Let me see if there's another good one. There's actually a lot. Okay. Do you feel that you should pay yourself every week? Not until you get to a very consistent level. I don't think you should until you get to a very consistent level, and I don't think you should pay yourself a week. I think you should do it on a monthly basis. Uh, Not a weekly basis, depending on your monthly performance. I think you should do it off that, not every single week, because obviously every single week is not going to be profitable. Every single week you're going to create a lot of pressure for yourself. So I think a monthly basis would make a lot more sense. But also, this is something that I think you kind of think about at least after your first year of trading. I think if you're someone new and you're starting trading and you're looking for trading to be your, income, I don't think you should expect it at least minimum a year. Like I have seen in the past people that have done it in like 2 months, 3 months, like very few people, some people in 8 months. Like for me, it took me 2.5 years for me to like go into my trading account and kind of take money out. But I have seen people under a year do it, but I would say a fair number to be comfortable would be at least a year. All right, and I'll do last one. There's actually a lot of great questions. All right, I'll do this one. All right, last question, and I'm going to end it. I just have to go actually. What can I do to stop freezing when pulling the trigger? It seems when I actually do execute, the stock reverses. However, when I freeze, the stock runs. Oh, very interesting. Okay. It depends what you're trading, right? That's where also market makers kick in. Sometimes when you have a very, 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 very large trade, market makers shake it. So I've noticed this happening with me. Like there's times where I'd go in, let's say I trade Apple, I am trading 500 contracts at times. I went in Apple, I traded 150 contracts. Market makers sometimes do push the price down a little bit, which shakes you out, right? Especially when you're going with size. So if you're going with size, you're gonna see that happen a lot. That's number one. Besides size, like I said, if you get into a trade at 10 and your stop or your exit point is 950, you shouldn't care if you buy at 10 and the stock pushes down a little bit. Like I don't care, because I've already accepted this loss. I've already accepted this move down, right? I already know that, hey, if I'm wrong, I'm gonna lose 50 cents on the trade, $500 on the trade, 5 grand on the trade. I've accepted that. So when it moved from 10 to 970, I don't care, because I've already factored in where I'm gonna lose. Now if it goes to 950 and now it's at 930 and I haven't sold, now is when I'm like, shit, what's going on? Right? So the earlier you accept that, the better it is going to be for you. And if you guys are paper trading, you're not going to notice, how market makers move stocks up or down, or your executions or your orders not getting filled. You start realizing with real money. And when you do go in with real money, just like going small, like trade small, right? And when you go in with small size, you'll just get a much better feel of the market. But this just has to do with a lot of old trades. When you carry over old trades, you keep connecting them and you keep connecting them, and you're like, oh, every time I buy, it goes down. Every time I sell, it goes up. Every time I do this, like you start creating all these messages in your head, and then when you start thinking that, you start seeing that a lot more, and then that starts affecting your trading. All right, so that's all, guys. I'm gonna end it here. I have to go. I wish I can answer all the questions. There's actually a lot of great questions on this webinar. Usually there's like 4 or 5. But yeah, that's that. Thank you for joining, guys. I'm gonna upload this in probably about an hour. It's gonna take about an hour to upload, so give it until 7. It'll get uploaded. I will see you guys on the next webinar. Good luck trading tomorrow, and have a great weekend, everyone.